All right, let's dive in. We're talking about a company today that did something pretty incredible. They took the simple, everyday plastic bag and built a massive corporate empire around it. We're unpacking the story of PT Panca Budi Edama, a real Indonesian powerhouse, and figuring out just how they landed on one of Forbes' most exclusive lists.
I mean, think about it for a second. A plastic bag company getting named one of Forbes Indonesia's 50 best of the best. That's a huge deal. It really makes you wonder, right? What are they doing so differently? What's the secret sauce here? Well, that's exactly what we're going to find out. Let's pull back the curtain and see how this plastic empire was built. Okay, so first things first. Who exactly is Pankabudi Adaman? On the surface, their business seems pretty straightforward, but don't let that fool you. This is a massive, incredibly well-oiled machine that's a huge player in the Indonesian economy. So their whole operation really rests on two main pillars. First, they trade in plastic resin, the raw material everything's made from. We're talking assets worth almost 750 billion rupiah back in 2018. Then, they take that resin and manufacture the actual plastic bags, which was another, almost 600 billion rupiah in assets? It's this two-part strategy, controlling the materials and the final product, that's really the foundation of their whole enterprise. And this is how they get into everyone's homes. You see, you might not recognize the name Pankambudi off the top of your head, but if you're in Indonesia, I bet you know their brands. Names like Tomat, Wayang, these are total household staples. They're the go-to choice for millions of people every single day. So you've got this already successful company, right? But how did they kick things into an even higher gear? Well, the answer was a real game changer for them back in 2017. They decided to go public with an IPO. The big question, though, was what were they going to do with all that new cash? And let me tell you, they did not waste any time. It was almost a blink and you'll miss it kind of situation. In March of 2017, the shareholders say yes. By December, they've got the official approval from Indonesia's Financial Service Authority, the OJK. And then, just 9 days after that, boom, they're officially listed on the stock exchange. Talk about a clear sign of ambition, right? And they had a very clear plan for every single rupiah. It was basically a three-part attack. About a quarter of the money went straight into upgrading their machinery. The biggest chunk, though, around 45%, was all about massive expansion. We're talking new factories, new distribution centers, with a really smart focus on eastern Indonesia. And the rest? That was for beefing up their day-to-day operations. See, this wasn't just about getting bigger. It was about getting smarter, stronger, and way more efficient. Look, having a great plan on paper is one thing, but execution, that's everything. So the million-dollar question, or in this case, the trillion rupiah question is, did it actually work? Did the strategy pay off? Well, let's dive into the numbers and see for ourselves. The results were, they were immediate, and they were seriously impressive. In 2018, their very first full year after the IPO, their net sales hit a whopping 4.35 trillion rupiah. And get this, that number completely blew past their own predictions for the year. It just goes to show their investments were paying off and way faster than anyone even expected. And if you zoom out and look at the trend over the next couple of years, the story gets even better. Yeah, okay, after that huge 2018, you see a dip in 2020. And don't worry, we'll talk about why in just a minute. But the key thing here is the rebound. Just look at it. By 2021, they didn't just recover. They actually shot past their 2018 peak. That's what you call a powerful growth trajectory. That's resilience. All right, before we jump to the next slide, let's just quickly touch on a key financial term, liquidity. Super simple way to think about it. It's like a company's financial safety net. If all your bills came due tomorrow, could you pay them with the cash and assets you have right now? It's a really fundamental check of a company's health. So how did Panchabudi stack up? Well, their financial health was rock solid. Their current ratio in 2018 was 2.39. Now, the industry standard for a healthy company is usually somewhere between 1.5 and 2. So what does 2.39 mean? It means for every single rupiah of short-term debt they had 2.39 rupiahs in assets to cover it. That is incredibly smart financial management, especially when you remember they were in the middle of this massive expansion. And it wasn't just outsiders who were impressed. This quote from their own board of commissioners from just this year really says it all. They praised the directors for their strategic and measurable acts. It's basically the leadership team giving a nod to the fact that this success isn't an accident. It's the result of a clear, deliberate, and really effective strategy.
But of course, it's never just smooth sailing, is it? No business journey is without its storms. And Panca Budi's story was about to get hit by some major headwinds that would really put all that success to the test.
And that first big test was a global one. We all remember 2020. The pandemic hits and the entire Indonesian economy shrinks by more than 2%. This is the why behind that dip in sales we saw in the chart earlier. It was just an unbelievably tough environment for pretty much every business out there.
But this is where the story gets really fascinating. Yeah, their sales dropped by over 16%. That makes sense. But look at their profits. Operating profit shot up by over 58%. Their total income soared by almost 71%. You're probably asking, how is that even possible? Well, they reacted to the crisis with insane efficiency and tight cost control. They didn't just survive the pandemic, they somehow managed to become more profitable during it. It's just incredible.
The other big challenge is a bit different. It's this long-term, kind of looming cloud on the horizon. We all know about the growing concern over plastic waste, right? Well, in Indonesia, that's led to serious talk about a new government tax on plastic products. And for a company whose entire business is built on plastic bags, well, that's a pretty significant long-term risk you just can't ignore. So that brings us right up to today and to the big questions about the future. They've proven they can grow. They've proven they can weather a massive crisis. So what's next? What does the road ahead look like for a market leader like this?
Well, one thing's for sure, they are not just sitting back and relaxing. They are actively making moves. Just this year, they did a stock split to make their shares more attractive and accessible to more investors. Their powerhouse brands, Tamat and Wayong, are still dominating, winning top awards for 14 years in a row. And the core growth is just undeniable. Their assets have swelled from 1.8 trillion rupiah back at the IPO to over 3.1 trillion by the end of last year.
And that leaves us with the final and maybe the most important question of all. Look, Panca Budi has absolutely nailed the business side of things. Masterful execution, incredible financial strength, total market dominance. They're a textbook success story. But as the entire world changes its relationship with plastic, their biggest challenge is still ahead of them. Can this plastics giant pivot? Can they innovate and adapt to write a new, more sustainable chapter? That's the real question. And the answer is something we'll all be watching for.